All right, so really quick, I just want to go over really quick with how I'm doing these top-down analysis, how I am looking at the potential trade setups, how I figure out, which direction the trade may flow, which direction price is going to move. So I just want to make this video really quick, show you guys what I'm looking at. I start from either the weekly or the daily time frame. Most of the time from the weekly time frame, but you can start from the daily. But let me show you guys exactly what I'm looking at. I'm gonna start this analysis from the weekly, so you guys can see how I analyze the charts to get an idea of which way I want to trade this market, or which way I'm looking for the market to flow. All right. So on the weekly time frame right here, let me just you see price came all the way down to the 2200 level. It began to reverse, right? But what I want you to notice about this reversal is the candlesticks. So how do you know price is about to start reversing, right? Remember, we use the Heiken Ashi candlesticks in this trading strategy. So when you see the candlesticks with one wick in the direction of price movement, that pretty much shows a strong trend. Like, take for instance this candlestick right here. You see this candle came out and you see the wick to the downside. Now this is when you're using Heiken Ashi candles, this does not mean rejection. This means strong momentum to the downside, right? So when you get to this level right here, you start to see this type of candlestick forming, where you have wicks on both sides, right? So that gives you an indication of price beginning to weaken in the momentum. Let me remove something really quick, get this out of the way, so I can show you guys what I mean. So you see price, on this candle right here, the wicks are beginning to flow to both sides, right? So that shows you price is weakening. It doesn't necessarily show a reversal yet, but it shows price is beginning to weaken, right? Then you have what most would refer to as a doji candle, right? Where you have price, essentially it didn't move anywhere. It came out, it went down, then it went up. Price flowed down, then it went up, then it closed in the same location, right? So that also shows you potential change in momentum. And then you get this candle right here. You get a clear momentum candle to the upside with a strong wick in the direction that price is moving. That is your change in trend. That is where you actually confirm, where price actually confirms the change in the direction, and that is where you can go ahead and enter the trade based on the momentum turning back over to the upside, right? So quick lesson right there. So now this is the weekly time frame. Let's drop down to the daily really quick. I'm gonna try to do this video really fast, right? So this is what you're seeing on the daily. You see price came up, you see the change in momentum right here, right? Coming right off this level, price change. So that's the trend line was hit, touches on the trend line, touch here, then price came down, right? So essentially right here is your change, is your breach level. This is where price went higher, and you got breach right here. If I drop to the 4 hour, you'll see what I'm talking about. Minimize this. Kind of want to go through this fast, but you will see where price was breached right here. Price touched, got breached. That is your entry right there. That is your entry for this trade, right? If you go back to the daily, it all makes sense. That is your clear entry right here. That is your entry on the trade. Stop goes back here. Looking for 100 and something pips. Pull back. We're looking for another strong move to the upside. How do we confirm this to the upside? Trend line following. Right? You gotta learn these things as a trader, guys. Regular divergence. This is regular divergence right here. Boom. Boom. Regular divergence. Now you see this deeper retracement on the momentum oscillator, right? But you have price trading higher. That is called hidden bullish divergence. Hidden bullish divergence, where you have deeper retracement on your momentum oscillator, but you have price trading higher. Hidden bullish divergence. You can expect to move. The first area where you can check price to see what's going on is about right there. That's your first level. That's your first level of resistance. 67. I'm trying to get like 100 pips out of this move. There it is. You can have a tighter stop loss if you want, but I like to set my stops for a reason. I don't want price to whipsaw down and come and take me out. If my stop loss gets hit, I would like the stop loss getting hit to confirm that I'm in the wrong direction. I hate getting taken out on whipsaws, because whipsaws only mean price just traded a little lower and it still may go your direction. If my stop loss is gonna get hit, I would like the stop loss to confirm that I should have been in a sell rather than a buy, and I really think this is a buy. So we're gonna go in. I'm gonna actually go in and probably gonna go in and make a trade here, and then look for a move back down later on this week. Probably gonna do something like that, but we'll wait for the right setup. Just want to show you guys really quick how I'm looking at what I look for when I am projecting out the moves. What I post in the Forex on the Pipaholic trading group, on the new Pipsaholic Telegram, and the Forex King 0909 Instagram page. All right guys, be easy. Forex King.